Hello and welcome to the look ahead for Tuesday, the 3rd of September with me, Fiona Cincotta, Senior Market Analyst at City Index. So the quiet start to the week does continue. Don't worry, things do pick up though as we look out across the rest of the week. But obviously we've had US Labour Day today in the US and Canada. And so tomorrow, just looking ahead, relatively quiet, the economic calendar. We've got Canadian manufacturing PMIs as well as US ISM manufacturing PMIs, and policymaker from the Bank of England, Breeden, will also be speaking. So just to kick off really with what we're expecting from US ISM manufacturing PMI, expecting a slight improvement to 47.8. That's still below the 50 level, which separates expansion from contraction. We're also expecting to see prices paid ease slightly to 52.5 from 52.9. Now, so that sort of those figures would perhaps suggest that, the US economy is not necessarily falling off any sort of cliff anytime soon. Let's not forget that those recession worries, which sort of started at the beginning of the month, they have calmed quite considerably after we've had the upward revision to GDP data. We also saw jobless claims last week came in relatively solid, as well as personal spending in the core piece in the PCE and personal spending data. So, I think that the market is just sort of easing up on those recession fears. Obviously, the US non-farm payroll report will be absolutely key to either be refuting or confirming those worries. But tomorrow we've got ISM figures for the manufacturing. As I said, those sort of figures, a slight improvement could help just underpin the US dollar. What we're looking at here is the pound US dollar chart. Obviously, we'll also be listening out to what the Bank of England has to say. But we can see actually that the pair has just eased off those highs that it saw in August. It got to a high of 132.60. Basically on the back of expectations that the Fed was going to be starting to cut interest rates, and potentially with a large rate cut from the Fed, and that the Bank of England would probably hold off until around November. Now, obviously, we've seen the market rein in those large rate cut expectations from the Federal Reserve, with just a 30% probability of a 50 basis point rate cut now in the September meeting. So as we've seen the US dollar pick up from the 13-month low against its major peers, it's just helped the sterling US dollar fall away from that 2024 high that we saw at the end of August. Currently just trading around here, testing this level here, which is the 131.50, 131.45 level there. It's the high that we saw in July 2023. If we get a break below there, then the next thing we'll be watching out for really is that 130 round number. Obviously, that remains within that ascending channel that it's been trading in, but it does just sort of pull that the price lower. If we get a move below that 130 level, that sort of negates the near-term uptrend that we're seeing for now. However, if we're finding that this level does hold around the 131.40, 131.50 level, then we could see another move higher. That would be if we're getting a sort of hawkish sounding Bank of England tomorrow. On the upside, we really need to rise above the 132.60 in order to bring that 133 level into focus. So the other one we're just going to take a quick look at is USD CAD. Obviously, worth bearing in mind that we do have the Bank of Canada interest rate decision later this week. But yeah, just having a look here, obviously we've got that data in from Canada, which, I mean, again, Canada's manufacturing is last in July, it was around the 47.8 level, so it's still below that key 50 level that separates expansion from contraction. Even if we do see some strength, I mean, it's worth keeping in mind expectations for that Bank of Canada meeting where they're expected to cut again. But even so, we've still seen the loonies manage to strengthen quite firmly against the US dollar. We've seen now, as we said, that the dollar has picked up from the 13-month low, and that's being reflected here as the pair just moves higher. As far as levels to be watching, this is the one that sort of it's moved above at the moment. That's the 134.70 level. If we get above there, then the next one I'll be watching out for around here is around the 135.90, 136. So that's the 200 SMA. It's also, can we see when it was trading in this sort of holding pattern around here? That was the lower band of that holding pattern. So if we get a move above there, I think that could be relatively significant as well. On the downside, be looking out for a move below sort of, if this level here doesn't hold at the 134.78, then watch out on the downside, 134.40 to create a lower low. I mean, the pair's trading at its, the Looney's trading at its strongest level since late March against the US dollar. So if we get some encouraging data from the Canadian PMIs, then that could help strengthen the Looney. But I think, the gains might be limited given that we're expecting a rate cut from the Looney in the coming days. So that is really all we're going to be watching for tomorrow. I hope you've liked what you've seen. If you do like it, then please do give the video a like. And if you'd like to subscribe for more videos, then please do.